Hello guys, welcome to this video, and in this video we are going to look into the price action of the Bitcoin and what is happening in the BTC. Okay, so right now in the Bitcoin we can see this is a range high. This is range high, and I'm going to name it. And also that's the liquidity area, and also it's a range high or edge, and this is a range low to us. And we sweep it below this range low and created a deviation, and this is what we call as a deviation below the ranges. And this is some of that, this is deviation, and we go there. And what we are going to try to get is obviously a move above this liquidity area. At least a 255 to 107 is what I'm looking for right now. And when we look at the volatility, it is cooling off right now, and it needed to get into this blue area to anticipate the next big move. Until then, it's kind of like a ranging process we should be getting, and where you should be really cautious and cautious about is definitely when the price gets into some area like for an example. Okay, if the price gets below 22 to 101, like 22 to 100, then you should be really cautious about the price. Otherwise, it's more probably, yeah, it's all a probability basis. Okay, so more probably I'm looking for 25, 107. Okay, so that's the area that I'm looking. Okay, guys, by the way, let's have a look into what happens in the market overall. From this area, the price was coming down and the open interest was going up, which means that new shorts are coming to the market. Okay, right? That is where it happens usually. And from this point to this point, this big move happened because there wasn't much big difference in the perp open interest coming in. So it could be because of the funding, right, is the one major thing which actually creates that effects, which helps to balance those effects. Like if there is a much larger buying pressure on the spot market, but it is not happening on the perp, then it reflects in the market overall through the funding rate. Okay, so if you are seeing a bunch of buying pressure in the spot market, but it is not visible over the perp market, you get a negative funding. So it motivates the people. It incentivizes the people to actually open new long positions, and it keeps the price of the futures up along with the spot. What if there is a bunch of sell pressure in the spot market, and if it is not happening on the perp, then there could be a positive funding, right? And it incentivizes the market to actually prepare or welcome new shorts in the market. So the price actually comes down. So it is the way which the price overall balances the market. So when there is this sort of a moves, only few open interest coming in, but the price moving terribly up, it could be also one of the reasons of lack of liquidity or the sell side. So the people can minimize the amount of liquidity that's coming in to the market and as a sell pressure walls by creating the hopium newses and good narratives and stories that people are getting rich through the crypto. So the people hesitate to sell, and they will be like to hold their positions until a higher price target. That's the way which actually minimize the sell side pressure, supply side. So that when there is a low liquidity or the sell side, then the price moves with a barely a little bit amount of, yeah, it only needs a little bit amount of open interest or new longs coming into the market to push the price higher. Sometimes it's it creates this sort of a choppy price action and get some shorts injected, and once they got enough shorts, they actually what they do is they make some longs and liquidate them, and they got this sort of a skis move, and that could be one of the open interest crossing. And this happens, that's kind of like a balanced process. That's why the open interest is sitting in a consolidation overall at those times. And Where the open interest actually picked up is at this moment, because you can see and observe this sort of a big open interest coming in, and if there is an enough effect over the spot, and if it is a big sell pressure coming in overall. It affects on the bull market, as I said before, it's through the funding, right? So here, the funding got negative, so the people actually forced it to actually cover their short positions. So once they get this sort of a big negative funding, then it's actually time for them to actually close their shorts, which they were holding, and they try to cover the shorts. So in order to get their shorts covered, they needed to actually get much more liquidity and much more longs, um, or yeah, I mean, much more sell pressure. So these times there were low volatility, and there was a bunch of sell pressure too these times, and they got exceeded most probably. And here, what you could observe is the last move is moving in this fashion, like they're adding some longs, moving the price higher, and getting into some liquidity area, and bam, squeezing their all shorts. Here, this is say similar fashion. The market moving right now nowadays, and this was the first time they got the skis, and this was that first liquidity area. They got the skis out from that point. So again the skis, again they are adding some more longs, then one more skis down, and this is what happens. The actually from where the shorts started getting in is from this open interest, from I would say this was quite a large point, and this is this the before the open interest support level was somewhere around 62,000, 64,000 something. I personally think that the price can reach that level, but there is how always a price versus open interest discrepancies happening in the market, because of when the price of the Bitcoin gets much cheaper, and it only costs a little bit amount of money to actually open new positions in the market, rather than completely large amount of funds, like one Bitcoin costs like around $60,000, and you need a $60,000 in order to put one Bitcoin contract if you are going with a 1x leverage. And it's the purpose definitely it is not something which gives you a total data, because it is bulkier, it is something which made up with a bunch of leverage. The exchanges are providing the leverage facilities. They facilitate that by using the money which they had borrowed from the investment banks. So yeah, the actual case for the price to, I'm looking for the price to actually move 25-ish area right now, and once they get there, they actually take out a little bit more shorts from the market, and the open interest comes even down, even further down, like a 64,000 or something. And once they get that level, then the question is, why do they are taking out the shorts? That's a buy market order. So they wanted to sell. Um, yeah, probably. So that could be one reason. Um, yeah. So the direction is not even clear, and it could be an accumulative phase, because there isn't that much larger narratives which is playing in the crypto right now. Uh, the halving is not yet, but what if it could be one more pretty much big range, and kind of like a spring, which happened over here. So another big move after that is quite possible case scenario. And I'm not going all in. What I needed to get is confluence. As a confluence, I needed to see market structure break and trend continuation upward. So for that sort of a trend continuation, I needed to get much more bigger sideways consolidation in this move. This move is completely created by illiquid moves up, so I'm not confident enough to take positions or take being part of this move. What I needed to get is through the theory, a move is flag patterns or consolidations, which is bullish, which indicates the bullish trend continuation upward. Unfortunately, we are not getting anything like that. So for a short term, I'm really confident about this target for say 25 100ish area, but it is all probabilities, guys, because nothing like so if a new piece of information comes in the market and if the price is getting rejected from here, then it could be further downtrend confirmation to the downside. And personally, I don't think like that because they're trying really hard to actually liquidate enough shorts. Uh, Once they get into this area, then this could be the area there a bunch of stop losses are resting, and that is why that area acting as a liquidity, uh, attractive liquidity area, and they are really thirsty for the price to actually get into that area. So once they're getting that, and once if they could actually get enough volume to cover or price being stabilized above this 30,000, then it could be a further confirmation for an uptrend continuation. Otherwise, it's still an accumulation phase, and once the price manage to reach here, I will be actually looking to distribute the or take partial profits in the coins that I bought from here. Every single altcoins I will be taking profit TP1 here. And okay, why do I TP1? Because I TP1 or I book the 50% profit out there because that's a trade management way. Because once if the price starting crawling back again, then I can buy back with that money again. So this is what we call as an accumulation phase. This is definitely an accumulative phase. There is nothing to be really surprised about. If you guys are lucky by using this indicator called accumulation and distribution, and I think this is okay. Yeah, I mean there was an indicator. So that's a common update which I would like to give. And what about the global market and S&P 500 also heading to a major resistance as we are seeing that it is uh, overall still maintaining that downtrend. Meanwhile, it is in a stable area. Price have actually becomes much more stabilized way, and it is what it is. Okay. There is also have some sort of a pattern called inverse head and shoulder. It can be yeah considered as a weak or deviation or something. Once if this thing breaks out of this area, then if we are getting a successful breakout out of this, then we will be probably getting enough target above of this 46, this area. What if we are creating a fake out as we did like this, or yeah, grabbing the liquidity above that and coming back down again and into this range, and that could be a range deviation, and the price would move further and grab this liquidity and create it back into the range or further trend continuation down. Then what personally I'm looking is I'm neutral in S&P 500, even though I'm expecting 25-ish area in Bitcoin, because it is possible for the BTC to actually move really higher because of due to the high position open into the market, injected that much of shorts. It can easily liquidate them and move the price really higher. It's not the case in sort of in terms of the US 500 and the gold. It's completely totally different scenarios. And what about the gold is gold? I'm really expecting for the price to actually move into 2083. That is what the level which I'm looking at the gold. That's the update. And if you guys have needed any more updates on some altcoins, yeah, I do think that the BTC update is really enough. And if you guys are want to check out the trade that we were doing together on the link, it is about to hit our take profit. Okay, we are in a truly humongous amount in profit. We made the long from here. We are kind of like a 27% up from where we picked up our entry point. And then the another call which I gave and which I had given on my Telegram channel was this Mana Decentraland, and we are terrifically up, like a 150% up. So it was 1.5x leverage position. Sorry, yeah, I mean in spot, if you bought this thing on spot, then you are this sort of a big gain holder. And if you were not bought this thing over the spot, if you bought this thing on the perp market with some sort of a leverage, then you could be even getting much more profit than this. By the way, even if you're buying in the spot or the leverage, do the risk management properly, because never go with your complete amount of profit money, because this is the simple terms of mistakes that the people often get or people often think, and this is what kind of like gets your mind into that narrative building. Because when I'm saying, like, if you were bought this thing in a spot, you would be 1.5x on your capital. This is not what I mean. Okay, not completely. Okay, if you're buying in the spot, you should be only going with a 10% or 5% of your total capital, and you would be like 1.5x of your total capital. Yeah, I mean 1.5x of your total margin or total 5%. So you would be getting 5 more percentage as a profit. So that is how you want to play. If you're playing in that way, like you're investing all your capital into this certain coin, and suppose you get money like a 1.5x, and you would be like 1.5x of your total capital. That's good. It's good for you. But what if it's just happening in the inverse side, opposite way of you? Then you would be losing money, right? You would be losing, even you have a probability for only getting a 10% of your capital rest in your account, or even 5%. Yeah, 99% of the people lose money in that way. They think in that way, straightforward. Okay, so it's a mistake that people makes. Never do the things again. You have a chance of allocating 25% of your portfolio in one cryptocurrencies, but even if you are managing in that way, the total money which you are allocating to the crypto should be only 25% of your total net worth or portfolio, and you should be that's really important. Diversification is one of the key elements which comes all the way. Should be picking up some stocks. I mean, putting some money into some stock market and gold and bond market. Probably, you should do that. If you have a bunch of money, there is no way to actually invest in debt funds or bond market if you are going along with a small amount of money, because that the returns that you get from the debt market won't be enough to actually cover all the inflation which the government is rising. But even though some cases, like in a bear market, it actually helps to minimize the effect of volatility which you get through the big swings which happens in the market when the volatility comes in a bear market. So it's all that about it. You should be investing in stocks and gold, commodities, and crypto. You should diversify. If you are not doing the diversifications, then you get trapped. Your portfolio would be really lower, in a bear market, and even in the case of cryptocurrencies, unfortunately, you won't get the money back when the next bull market comes in. If you are looking back into the XRP, it never have crossed its previous all-time high. Suppose when you are thinking about the people that bought the XRP at the top, they never would have get any opportunity for exiting the things in the profit. So that's why even if you're holding 10 years or whatever the years, it never gets into that high again. In terms of cryptocurrencies, there is how a ton of cryptocurrencies like that. It never create surpass its its previous high. So just something which you should be really keeping that in mind. In crypto, you can make a bunch of gains if you're playing safely in a bull market, because in a bull market, everything goes up. So even if you're buying any coins, you get 10x or some, sort of that result. But what if this thing's getting against you? Then you'll be losing that money. So only put the money that you are affording to lose. Otherwise, never play in this market. So that's it.